welcome to High Growth with HTDC. I'm your host, Cindy Matsuki. HTDC is the state's tech evangelist. We support tech, innovation, entrepreneurship, and manufacturing, and there's so many amazing things in Hawaii that we want to share them with you. And there's a lot of things that I learn every day doing the show. So we want to share them with you here on ThinkTech Hawaii. First, I want to let you know what's going on this week. There's a lot of stuff going on. This week especially is busy. This Wednesday, tomorrow, September 24th, is Wet Wear Wednesday. We're celebrating Oktoberfest, co-sponsored by HTDC and HICTA, the Hawaii Information Communications and Technology Association. And we'll learn about the newest accelerator in Hawaii, Accelerate UH. So please join us at Honolulu Beer Works in Kaka'ako tomorrow at 6. Hope to see you there. Next week, Friday, October 3rd, is National Manufacturing Day. HTDC's Innovate Hawaii and the Honolulu Chamber of Commerce are coordinating Hawaii's Manufacturing Day to raise awareness and support of manufacturing in Hawaii. You'll be able to visit manufacturing facilities like Airgas, Manoa Chocolate, Big Island Biodiesel, Maui HCNS. If you'd like to open up your manufacturing facility for tours or you want more information to visit, please visit us at htdc.org/innovatehawaii. Next, Startup Ideation Bootcamp by the Founder Institute is having an info session this Wednesday as well, tomorrow, at ZenWorks from 6:30 to 8:30. So if you're thinking about starting a business, please check out the Founder Institute. This Saturday, September 27th, is Rails Bridge Hawaii, Hear Me Roar, a Ruby on Rails workshop for women at the Iolani School Sullivan Center. The focus will be on developing functional web apps and programming in Ruby. And they're even providing childcare. I like that. And also, do you need any legal advice regarding your business? HTDC is offering free legal guidance in partnership with the Business Law Corps. You can sign up for a 30-minute appointment at the Manoa Innovation Center. If that's you and you need some help, please visit htdc.org/legal to sign up for your 30-minute appointment. And on a short note, I wanted to let our entrepreneur community that we have office space available at the Manoa Innovation Center. The Manoa Innovation Center is the state's incubator facility, and we offer a collaborative community, co-work spaces, office services, and great programs for starting businesses. For more information, please visit our site at htdc.org. Okay, that was a lot of announcements. So now we can get to our wonderful guest today. My guest today is Martin Zom. He is the president and COO of Kamakura Corporation.
Hello, Cindy.
Hi, Martin.
Good to be with you.
Thank you for coming. So Kamakura is like a hidden gem in Hawaii. And when I first started at HTDC, I kind of went over all of the tenants that have ever been through the incubator. And Kamakura was one of the first. And now you're like this powerhouse in your industry. But I don't think too many people in Hawaii know, like have even heard of Kamakura. So, and I don't think I even understand what Kamakura does. But so tell us a little bit about your corporation, Kamakura.
Sure. Kamakura is a risk management company. We have two lines of business. Mm-hmm. One is we provide an integrated risk management, and by risk management I'm talking about interest rate risk, market risk, liquidity risk, to banks, insurance companies, really financial managers around the world, as well as central bankers and regulators. And we started that back in 1993. The company started in 1990 in Chikasaki, Japan, which is right outside of Kamakura, hence the name. And in 93, we offered the first commercial integrated risk management product, and we were selling it along with consulting to primarily Japanese-based financial concerns. And then we have a second product line, which is a default probability system, which we provide default probabilities on public companies, private companies. We just, in fact, a couple weeks ago introduced our U.S. bank default model. So, we really have been known for our continuous innovation.
Wow.
And that's a little bit about the company. A little bit how we got to Hawaii is, as I mentioned, we started in 1990.
Yeah.
And then we moved in June of 1997 is when we moved from Japan over here to Hawaii. And it might be instructive for people to understand that decision process.
Yes.
You know, our founder and CEO, Don Van Devender, was really looking to expand the company. He had a very successful company in Japan, had clients in 2 countries, and really had aspirations for us to be a leader globally in risk management. And one of his mentors really said that if you want to have an international company, you probably need to move to one of the money centers or back to the United States. And Don started a process of looking at some of the places that he could move to. Most of the early employees had worked in places like Tokyo and London and New York and didn't want to be in Tokyo, London, or New York. And so, they looked basically at the West Coast, and that was also when Hawaii was starting Act 221. And when they did the analysis, one of the things they found is that economically, with Act 221, Hawaii was a very attractive location to come. And of course, Manoa Innovation Center provided an additional incentive from a standpoint of office space. So the company moved here with Bill Hall and Don back in '97, located at the Innovation Center. And in terms of saying how successful that move has been is, today we have customers in 43 countries.
Wow.
And we have 26 employees, here in Honolulu and close to 100 worldwide. Wow,
that is amazing. And that's great that you grew it from Hawaii.
No, absolutely. It's been a great place for us because most of our business is actually exports. 80% of our sales with customers in 43 countries, as you'd expect, we'd be doing a lot of exporting, and 80% of our sales are international. The breakdown is roughly 20% in the U.S., 10% in Canada, 40% in Europe, and 30% in Asia.
Wow.
And being here has a lot of advantages, and one of them is a time zone because it allows us to bridge Europe and Asia. This morning I was on the phone with one of my colleagues on the East Coast, along with one in Barcelona who was at a risk conference there. And this afternoon I was talking to one of my colleagues in Australia, so we could bridge East and West here in Hawaii without losing a business day.
Wow, that's great. That's amazing. What are some of the challenges that you faced being in Hawaii?
Well, one thing I'll talk about another advantage, and then talk about the challenges. One of the other advantages is that we've been tremendously successful in recruiting people.
Oh, that's
and
good.
Here in Hawaii, we have our developers, we have our finance and administrative team, and our executive management. And then we've got our what we call our client services folks, the people who call on customers and support our clients around the world. And as a result of our being here, we have not lost a single developer since we've been here. If we were in Silicon Valley, that wouldn't be the case, where people change jobs hourly. So it's been a great location to recruit people and retain people. Probably the biggest challenge that we face is growth capital. And it's a wonderful market for startups, and there's a lot of seed money here, and I work with a number of the incubators. But what you do have is a fairly conservative financial group here who lending against software receivables isn't something they're used to doing. And one of the things that we run into when we talk about growth capital, especially with mainland investors, is there's a bias against an operating company being in Hawaii. And we've had several investment opportunities with nice valuations, nice structure, but one of the criteria has been that you need to move to the mainland. And we have been fortunate enough to be able to say no, because we are committed to being here in Hawaii. But in exchange for that, we've probably had slower growth than we could probably have been able to obtain with a little more growth capital.
But you've grown an amazing amount still.
Oh, it
even
is. We, you know,
without that.
we've been able to do double-digit growth without that.
Yeah.
And, you know, it really is a matter of having the right product at the right time, without getting too technically detailed. You know, some of the things that differentiate us from some of the other risk management companies has been, you know, Don's really foresight, working along with Dr. Jarrow, who teaches at Cornell and runs product development for us, to develop a model that is a simulation model that really allows you to simulate how underlying macro factors, things like interest rates and home prices, would have on asset values. So if you think back in 2007, there was nobody that was saying that home prices would fall by 30 or 40%. But if you go back and read Don's blogs, you'll see that Kamakura was talking about questions like, do you know what will happen to the value of your investments if home prices fall?
Wow.
And develop a system that allows you to model and simulate those types of things, which today, that's exactly what the regulators in their stress testing are asking banks and insurance companies to do.
Wow, that's like fortune telling. Kind of. That's amazing.
Well, there's an old expression that says, you know, the meaning of luck is what happens when preparation meets opportunity.
That's true. That's true. That's a good one. So basically, you haven't taken any large investment like growth capital, like you had mentioned. So how did you survive, and how did you grow the company?
You know, there's an expression in the tech world called bootstrapping, and you know, that's what we basically have done is we've bootstrapped. So 90% of the stock of the company is owned by the employees.
Wow, that's
and
great.
the other 10% really are friends and family. And what we've basically done is, you know, reinvested all the revenue we've generated back into research and development.
Wow.
And, you know, continued, as I said, to really excel at continuous innovation and develop new models and introduce, you know, new ways to look at risk, to allow, you know, our clients, so whether they're money managers or large banks or insurance companies, to better control their risk and understand it.
I would think especially in finance and tech, where you're kind of in the middle of both, and both of those industries are just changing so fast that your company kind of has to stay ahead on both fronts.
No, that's absolutely, you know, the case. Is that, you know, we're fortunate in having, you know, some very good developers. You know, in my background was basically being a banker and has been on the capital markets and financial side. And I used to kid around and say, well, it's not rocket science, but truly the developers that we have are rocket scientists.
Yeah.
You know, two of our lead developers, one is a, you know, physicist that when we hired him was working on the accelerator lab over in Stanford. The other was really a rocket scientist. He was an astrophysicist studying neutrino penetration of the
Oh
polar
my
ice
gosh!
caps.
And now they're doing
You know, financial
risk
modeling.
management. That's amazing. Well, so do you find most of your developers locally, or have you?
It's been a combination. So we
Combination,
have you know, brought people over that we've recruited from the mainland, mostly from some of the, you know, leading universities. You know, whether it be Harvard or Stanford or UC Berkeley as some examples. But we also have had a very, very successful partnership with UH and with the Scheidler School, and we have, you know, employed a large number of interns that have been working on their PhD or working on their master's. And many of those, after doing internships with us, have later stayed after they've gotten their degrees.
That's great. That's the best way to do it,
Yep.
because then you know who they are already. How do you find your customers, especially internationally?
You know, right now it's actually almost embarrassingly easy because because people
Wow.
are finding us and calling us.
That's the best.
But it's really come in a couple different ways. One is that we've had over the years some strategic partnerships. An example was a company called Fiserv. Fiserv is a Wisconsin-based Fortune 500 company that sells banking software. Who was looking for a partner who had more advanced risk management system than they did, and we partnered with them where they could in turn resell our risk management system that complemented what they did. That relationship has matured to where over the last couple of years we actually have been switching our business model to direct sales and distribution, and the people who were with Fiserv now work with us, and probably the last part of that transition occurred last August, where we brought their Asian team on board as Kamakura employees. Wow. And it was the largest growth move in our history, is that we added 13 people in Singapore.
Wow.
That advanced our relationship with Fiserv one step further. And additionally, we have people, as I said, in the U.S. and around the world that have come from banks and have come from risk management companies and know who needs our product and have the relationships to be able to sell to them.
Wow, so when you bring in people, you kind of bring in customers at the same time?
Quite often. So
That's great.
We also have the advantage of dealing with some of the largest companies in the world, and from a financial standpoint.
Who already have the huge reach.
Exactly. So somebody like China Construction Bank or Da Sing in China are customers of ours.
Wow.
We have a lot of global companies that once you do business with them, at the end of the day, the finance field is a relatively small field that everybody tends to know everyone else. So everybody knows who's using what system.
That's good. So you must have a good system if people are calling you up. That's great.
Yeah. It is, and our retention is very, very good.
That's great. And what's next? What's next for Kamakura?
Well, I think we're going to continue to look at different ways to to innovate. And I think that when you take a look at financial risk, is that historically it's been looked at as a compliance function as opposed to a way that managers and boards can help manage their own capital. And we'll continue to expand, whether it is say in the U.S. in stress testing to smaller banks or to the insurance industry or to fund managers. So there's a lot of opportunity for us.
That's great. Good. We need to hear more stories like Kamakura on our show. Thank you so much for joining us.
It's my pleasure, and thank you for helping us get our start in Hawaii back at the Innovation Center.
So exciting. So good to have success stories in Hawaii. Woo! And Kamakura is one of them. What a great story. So this has been High Growth with HTDC. I'm Cindy Matsuki, your host, and my guest has been Martin Zom, COO and President of Kamakura Corporation. And this has been ThinkTech Hawaii. We'll see you next time. Thanks.